The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. I'm Karen Cho with Steve Sedgwick. These are your headlines. Micron shares surge in extended trade after the memory chip maker blows past guidance expectations. Risk on sentiment drives an Asian equity rebound while chip plays surge on the back of Micron's bumper outlook.
Turning to the banking sector, the head of Spanish lender BBVA warns European banks risk falling further behind if governments block takeovers, whilst the CEO of France's largest lender echoes calls for consolidation.
If I would ask you how many banks are there in Europe, your right answer would be too many. Yeah. So if we are very fragmented in activity, therefore the competition is not the same thing as what you might see in other regions. So the way is you basically should get that consolidation and get that going.
And we're going to hear exclusively from the CEO of Banco Sabadell at 9:30 BST. And turning a corner, the OECD's chief economist tells CNBC the global economy is stabilising. Wait for it though, he urges governments to focus on fiscal discipline.
More than discussing how many cuts we're going to have, I think is more, we are in the right direction. Now it's time to focus on two things that I think is essential. First on fiscal and obviously on structural reforms.
We kick off the show looking at Micron shares. You may be asking yourself, why is this the headline story? And the reality is that we had a review of the big chip sector trades on the back of the Fed. This was what inspired, again, a large pop in the sector. We had the 50 basis point reduction from the central bank, largest one-day move we had then in chip stocks. And since then, I think we've gone back to the old playbook where the market is now raking back over some of these exposures. In many ways, the perfect storm for Micron. A lot of the analysts going into this were somewhat underwhelmed and thinking that this may be a downbeat number. In fact, it was just the opposite, so you got a pop in the stock. And of course, the supply-demand dynamics that investors are now raking over, which is having implications across the Asian markets, where you now have the AI story that is tilting supply and demand. And the messaging from the CEO over at Micron was, look, this is going to continue on for a bit. So to me, what you had was the perfect storm for Micron stock in the session yesterday, which is why it took off.
Yeah, one of a very small point as well. They're also talking about dear old personal computers and smartphone demand as well. And of course, as we've seen from Apple and a lot of the other key players on both the PC side and the smartphone side as well, real concern about demand there. They say they're emerging from that slowdown in demand. So I thought that was a very interesting catalyst for those not exposed or as exposed to AI as well. Yeah. The other thing I would say is the sensitivity of these stocks to the news flow is still quite extraordinary, whether it's Nvidia, whether it's Micron, whether it's Intel, across the whole supply chain, TSMC as well. The sensitivity is enormous as well. So the volatility amidst these single stocks, whilst the volatility on the broader index continues to be underwhelming, for instance, the VIX is trading just over 15, the sensitivity of these stocks is still absolutely enormous.
I'm going to throw that one back at you because I think it's good to remember that this can work in the opposite direction. And we've seen it in the past around DRAM, we've seen it in NAND memory, and these are areas that this company has played in the past. But the reality is in these numbers, because of what you're seeing in the high bandwidth memory part of the market, the demand there is still strong and supply is somewhat stretched because of what we're seeing around the AI story. So I think just important to remember this is moving to the upside today, but could also move to the downside at some stage in the future if demand supply dynamics start to change. Don't forget, small stock when it comes to the ETF semiconductor basket. It is less than 4% when you take a look at the Philadelphia semiconductor. There are other big names in the basket, but it is the direction that this is sending for the Asian markets as to why it's significant today. Micron shares surged in extended trade after the company forecast better than expected first quarter revenue. The chip maker sees up to $8.9 billion in revenue in the first quarter and strong demand for its memory chips used in the AI data centers. For its fiscal fourth quarter, the company posted $7.75 billion in revenue, up 93% on year and ahead of Wall Street expectations. a look at the Asian chip makers taking a leaf out of this book, and you can see on the front foot big gains in SK Hynix in particular, and across to Samsung Electronics soaring 3.2%. And let's get out to Sherry for more. Sherry, this is a well-worn path as we talk about supply and demand in the memory chip market, but of course there's another feature here, and that is AI.
This is, of course, yes, a commodity part of the AI space that we talk about here. And in terms of the market reaction, we've got more pronounced gains coming through for South Korean chip makers along with Japan. Not so much for Taiwan, again, because it's the memory story. When it comes to those bullish front lines around high bandwidth memory chips that we got from Micron technology, the total available market for HBMs being $25 billion US dollars next year, when it was just at $4 billion US dollars last year. Yes, we are seeing a nice lift coming through for Samsung Electronics as well as SK Hynix. SK Hynix tends to show bigger price action than Samsung Electronics, so that is one layer to explain that kind of price action. And then, of course, this stock is trying to recover from the massive sell-off that we saw early last week. And that was prompted by this downgrade coming from Morgan Stanley, citing DRAM oversupply concerns, and SK Hynix is really losing its pricing power as well. So a big downgrade when it comes to target price as well. But SK Hynix is trying to recover from that. Now, most others in the market are pushing back against that oversupply concerns, because it's a different era. Local brokerages are saying that this is an HBM era where they can actually go for more value add, higher margin HBM chips as well. So in the traditional sense, the industry is showing signs of peaking out, sequential decrease when it comes to DRAM price growth. However, once again, things could be different because it's AI boom, because it's HBM new era as well. Maybe we'll get some kind of a confirmation from Samsung Electronics when they come out with their latest quarter guidance on October 8th. That is the market expectation. We'll see how things go. But for the day, it certainly looks like AI trade is definitely back on. Guys, it's back to you.
Super duper work. Thank you very much indeed for that as ever. Right, our US colleagues will be speaking to the Micron CEO later today. You can catch that interview at 1400 British summer time.
I'm going to take you to US markets, and we had somewhat of a mixed picture. Some of the enthusiasm just coming out of markets. You can see the Dow reversed down 0.7, slippage on the S&P 500. It was just the Nasdaq that was in front, and that is the same story for the trading week, where it's been the Nasdaq that's been eking out the gains. We're still trading higher on the tech-heavy index to the tune of about 0.75% versus the Dow that is down by about 1/3%. So what played in some of the gains yesterday? Well, it was certainly not energy. That's where we saw a reversal, despite, again, a lot of geopolitics playing out in the Middle East. Utility is actually the best performer. That was a trade up by about 0.5%. FANG Plus stocks underwhelming. They fell. We gave back some territory there. Fairly significant dip out of the banking stocks, also down by 1.3%. So it was a give back session, which is why this chip story in context is fascinating. We may get some focus again in some of the trading session ahead. Let's take a look at what we're seeing on the Treasury market. There's been a little bit of chatter in the bond markets about concern around reinflation again after a 50 basis point reduction from the Federal Reserve. All is not well, with some bond market participants worried that the Fed might be too aggressive now and concerned that they should be taking some protection against inflation. Things move quickly, don't they, in bond market territory? So you're seeing it at the 10-year, 3.78% is what we've got. The short end, we approached around 3.55%. Dollar trades in this context, a little bit of green on those yields. The dollar is actually a little bit weaker in the morning session. We are seeing euro sterling strength. Again, a focus on some of the policy action on this side of the world. The Swiss National Bank and its policy setting next off the agenda, as well as some speak by the ECB. A lot of chatter too from the Fed speakers later on today. A dollar this morning is also declining versus the Japanese yen. And you can see dollar weakening versus the Swissy, where we are focused on the S&P stick.
Super duper then. Okay, let's have a look at these futures. They are trading mildly in positive positive territory, with the Nasdaq more than mildly in positive territory, actually 0.9%. So many questions to ask Barbara Goodstein, who joins us now, CEO of R360. Barbara, lovely to see you. Thank you so much indeed for joining us, and an ungodly hour over in New York as well. But look, lots of bigger picture questions as well. But Karen and I were just talking about Micron, and as she quite rightly pointed out, it's not one of the biggest semiconductor-weighted stocks out there, but it is yet again another metaphor for the demand and the appetite for AI. Is this sector and the sensitivity of the individual stocks still having a disproportionate effect, an exponential effect on the broader market, given the fact that, of course, so much of the rally of this year is down to AI-related issues?
Well, we think that AI, while being significant, is only one of the things that's driving changes in the market. Obviously, when the Fed raises rates 50 basis points, we have to pay close attention. That's only happened twice in the past, and the two times it happened, recession followed. So we are very conscious of all of the different things that are going on in the market at this point, and our centimillionaires, this is a club for centimillionaires, have a unique perspective because they have the luxury of waiting. So they can be very patient, just like a Warren Buffett. They have patient capital and they have patient perspective.
They do and they don't, Barbara, if I may beg to differ. They can be patient, but they can't look at new trends going ahead of them too far. Hence the appetite for extraordinary valuations, for instance, for OpenAI, which I read eye-wateringly has a valuation potentially in the current round of $150 billion. So I absolutely hear what you're saying about the centimillionaires and having the patience to wait out and become investors rather than traders. But if they miss these trends because of these extraordinary valuations, because historically they are unbelievably extraordinary, then they could maybe never get into these stocks at these entry points.
Well, I think that they are also looking for value, just like a Warren Buffett looks for value. We also look for value, and there are many other opportunities. So there's no necessity to jump. This group is very focused on building wealth for the next generation and many generations to come. So things like Bitcoin have a much longer runway, and we think there's a much longer perspective there. Bitcoin touches multiple places before it gets to each person, and banks will potentially be disintermediated at some point. Blockchain technology will eliminate 99% of those fees. So we think there's an enormous opportunity here. Bitcoin is to moving money what voice over the internet used to be to long distance phone calls. That's a big opportunity, and that's a multi-generational opportunity. And that's the kind of valuation and opportunity and upside that we look for.
So Bitcoin's something you're watching. Barbara, can I just bring up some of the concerns that have cropped up every night that inflation could reignite? It felt like for many weeks and months now we're talking about that being in the rearview mirror for a lot of investors. But to hear that some investors are now taking protection because they're concerned that the Fed could go too far in cutting, what does that say to you?
So we are also concerned, and we're watching the markets closely, and we're watching some of the key indicators here. New hires are down. The top 10 employers of new MBA graduates decreased their graduate hiring by 61% in 2023 compared to 2022. That's a significant number when you sort of understand that hiring is going down. Pet product related sales have declined to their lowest level since 2009. Those are discretionary spending. So we're looking at those indicators, and we are also concerned, which is why we're focusing on big opportunities that will move markets and change markets. This morning, a group of female centimillionaires met together, and we talked about opportunities in biotech. We're extremely focused on longevity. We have 8 medical doctors, 4 of whom are billionaires in R360. And this morning we talked about a vaccination for Alzheimer's. So we're looking at big long-term moves because we understand that there's a instability in the market right now.
Barbara, what do your investors and people you're speaking to make of some of the market moves we've had lately? I mean, we had a jolt in August that really took us out of complacency territory. We had another reminder in September, but some of this seems to be soothed over by a big move by the Fed. How are people really feeling about some of the volatility that has returned to markets?
Well, we have a unique perspective because we are centimillionaires, so we have the luxury of waiting, and these people have accumulated enough wealth that they can sit on wealth and also sit on cash. We are very focused on finding good value, and sometimes that means going outside American markets and looking at emerging markets, looking at financial stocks in emerging markets for one thing. Gold is at an all-time high. So there are big opportunities in the markets. You just have to be very focused on where you're going next.
It's a fantastic conversation, and I get the message. These people are very rich and they can be patient. But if I may come back again as well, and it's great to hear that people can take a medical profession and become billionaires. Who'd have thought it? But also, what are their valuation criteria? And I'm going to go back to the previous point I was making. Warren Buffett would struggle to pay 30, 40, 50 times sales or using his traditional value proposition as well. Do you have to look to different metrics to find value in some of these extraordinarily valued growth stocks as well? And I appreciate value is part of the Buffett way, so to speak. We've all read the book as well. But in terms of your valuation criteria, do you need to change it in order to jump on some of these trends?
Well, not necessarily, because some of these markets still have enormous upside. For example, defense stocks, we think, still have big opportunity. The U.S. is still spending less as a percent of GDP than it has historically on defense. So we think there's more room for growth in defense stocks. We think, again, that new technologies are emerging and biotech is going to be an enormous opportunity. And then Bitcoin, just tremendous, tremendous upside in Bitcoin. So this is a group, as I said, they can afford to wait and they look closely. They're very focused on intergenerational wealth. We have a group called Rising Leaders, where we prepare the next generation to understand the opportunities and to also look closely at different asset classes and market opportunities as it's coming their way.
Thanks, Barbara. Nice to see you, and thank you for staying up a terrible hour to join us for this conversation. Barbara Goodstein, CEO of R360, and everyone else watching out there as well. If you're thinking about a medical career, you can still become a billionaire. Moving on, a very, very important set of announcements from the Chinese Politburo. I'm going to take my time over this as well, because a lot of people, including myself, have been looking at what the PBOC have been doing and on monetary policy and saying that's great. That eases potentially the supply of money, but it doesn't create more demand in the Chinese domestic economy. The Chinese Politburo perhaps addressing a lot of those issues now, including will make efforts to stop the falls in the property market to get it stabilised, will strictly control the amounts of new commercial homes construction, i.e. Not swamping the market potentially. We've heard these stories about ghost infrastructure and ghost cities. Will increase efforts to attract and stabilise investment, not just on the property sector they are talking. They're talking about the people who potentially will be buying these properties. Will increase the income of low and middle income groups and improve the consumption structure, so says state media. Will implement lower RRR, forceful interest rate cuts as well. Will ensure necessary fiscal spending, according to state media. There's a lot in there, and there's a lot we'll discuss over coming shows and days, but you've got to remember the fiscal constraints on China are absolutely enormous. And I know we're going to talk about it a little bit later on as well, but let me just tell you that the places in the world that are growing their debt to GDP and their overall debt greater than anywhere else in the world are the Indians, the Russians, the Swedes, the US, but topping the list at the moment is still the Chinese. So great, that's what the market wants to hear about the fiscal support as well as the monetary support, but there is a cost.
Is China back? I mean, that's the question a lot of analysts have been asking this week, whether the gains we've seen are sustainable, whether China has done enough. And I think it's really interesting to hear the comments about really acting in a traditional way that economists used to. If you get a downturn, you stimulate, you use all the levers. And it's talking today about stepping up the force of counter-cyclical adjustments of fiscal and monetary policy. So this, according to state media from the Politburo, I think that is fascinating. So typically we've seen this in the West and we've seen it in a large scale way in China in the past. It's just been absent in this cycle in any given way. So I think fascinating they're talking about short-term measures, but they're also tackling the aging population in some of these comments. They're talking about some of the long-term measures as well here.
But they're not tackling the aging population, are they? They've
ruined
put it on
the agenda.
Demographic issue, but by having the ruinous single-child policy for way too long, they cannot address the demographic issues in a very short period of time. Because Chinese women are not in a hurry to have massive families.
We'll pay close attention to improving the system of childbirth support policy. So that they are putting it on the agenda.
But they're not. They're talking about
just hit the wires.
Well, but they're
it's on the
talking about it. But they've been talking about demographic challenges for decades. And they've created most of them by the ruinous policies of 20 years ago.
I'm not saying they're going to achieve it, but I'm saying it's on the agenda. They're looking at it.
Let's get to Arabile.
It's already ramping up to be a busy one, isn't it? Here's what's coming up on the show. Meta is betting on augmented reality glasses as it unveils a slew of AI features. We'll bring you all the details. Plus, Kamala Harris and Donald Trump, well, they've held rival events as the presidential race heats up. We have the latest from the campaign trail, and the Swiss National Bank, well, they're getting ready to give their rate decision, with markets split on whether the central bank will go for 50 basis points or not. We'll bring you that decision and hear from the chair, Thomas Jordan, later today as he prepares to step down. Stay tuned. This is CNBC.
Welcome back. First round talks between Volkswagen management and union chiefs ended without an agreement. Workers threatening mass strikes in the face of layoffs and potential plant closures in Germany. Volkswagen insists it needs to take deep cost-cutting measures in the face of rising competition from China. It's extraordinary, isn't it? It's the same company that doesn't want tariffs on those Chinese. Anyway, this month it also ended a decades-long job security agreement for staff at 6 of its plants. Manfred Knof will step down as Commerzbank CEO at the end of this month. How long's that? That's, 4 days. Wow, there you go. The development comes after the board announced it had picked the CFO, Bettina Orlopp, as his successor even. The board chairman, Jens Weidmann, remember him of the ECB and the Bundesbank, said Knof had agreed to step aside in a timely manner, quote, in view of current challenges, as it battles takeover advances from Italy's Unicredit. Major German asset manager and Commerzbank shareholder Union Investment is urging the German lenders board to go into talks with Unicredit with an open mind. Yes, saying cooperation between the two banks would not necessarily be to Commerzbank's detriment. The asset manager also admitted that despite opposition, somebody's just completely taken my read away. Anyway, let's move on. Karen, BBVA.
Yeah, there's a lot of moves in the sector, and the CEO of BBVA is warning Europe will fall behind if lawmakers continue to block potential takeover deals in the banking sector. Speaking to Charlotte at the Bank of America Financials Conference in London, Onur Genk said Europe is lacking banks with sufficient scale and scope to compete globally, and that consolidation in the sector is good for the industry and good for countries' economies. This as BBVA looks to tie up its own merger with Banco Sabadell.
We do think this is good for Spain. Good for Spain. We are giving the same numbers all the time, but this gives an additional €5 billion additional lending capacity to the Spanish economy. We are looking for scale. Yeah. European banks, Spanish banks, we need to look for scale because our costs are increasing, especially in the technology space, which is a fixed costs. If you are not large, you would not be able to compete globally.
BNP Paribas has signed an agreement with HSBC for the acquisition of its private banking unit in Germany. The deal aims to be closed in the second quarter of 2025 and is expected to push the French lender's assets under management above €40 billion. Let's get out to Charlotte for more. She joins us live from Bank of America's Financial CEO Conference in London. Charlotte, we heard it firsthand at the start of the year that there was some motivation from banking CEOs to get going with consolidation attempts, but they did see a whole heap of hurdles ahead of them. Just walk us through what you're hearing from the conference today.
Yeah, and it was interesting to talk to the CFO of BNP Paribas because, they'd been sitting for a while on the large war chest after they sold their US subsidiary, Bank of the West, last year. And the question, what would they do with it? And for a long time, we're saying, look, we're looking at bolt-on acquisitions. And so we're waiting to see. And so we have the beginning of an answer over the summer, but in particularly entering exclusive talks with AXA Investment Management to buy the unit. So €5.1 billion there. They said they're particularly interested in their alternative asset portfolio. So they will have €2.2 2 trillion euros under management if the deal goes through. So it makes them Europe's second largest asset manager in Europe, just behind Amundi. And they say that's very much part of the strategy. They're pushing into that area. And the latest one, just a few days ago, as you were just mentioning, HSBC's German private banking arm, again, they didn't give any financial details on this, but that's something where they're looking at, again, fitting with the strategy of expanding their wealth and asset management activities. And that's what I asked Lars Machenil, the CFO of BNP Paribas, why he felt that these two operations were the best one for the strategy of the bank.
The sales of the Bank of the West effect into the kind of activities which are related to wealth, asset management and insurance. So we've recently announced the deal in Germany that allows us to have a serving towards these clients, which is very relevant because they are typically needing kind of a European coverage, which we can offer. We have a European platform on which we can serve those needs. And so we're very pleased to have that. And it's the same thing in what we've done with respect to AXA Investment Management, where we are doing the same thing. We are able to strengthen the products that we have and the cross-sell that we are doing. And for us, that is really important because if you look at it, those services, they are important to their intrinsic customers, but also to the rest of the bank. And so it allows us to grow very fast. If I can make the analogy, we are doing in that domain what we've done in CIB a couple of years ago. In CIB, we have been able to step up both the prime activity, the cash equities and the likes. We have a complete set and we have been able to grow very materially our market share. And so basically within that domain of investment and protection services, we're now building that same thing that we've done a couple of years ago in CIB, and we stand to grab market share going forward.
So looking at that AXA Investment Management talks that you've said, it's exclusive talks. So 5.1 billion euros, a big bolt-on. You also talk about you bolt-ons of the money from Bank of West, but that's a big one. And that would give you really scale. And that's the key there when it comes to asset management. It would give you the scale. So you would come second after Amundi in terms of assets there under management. So how are the talks going there with AXA, and what did you feel like this one in particular was the best fit for you?
Yeah, so it is a really good fit. I mean, bringing it together, in particular with long-term savings, we will basically be the leader in Europe. And it is really, if you see what it brings together on one hand the distribution channels that we have, then it brings together the great products and services and the teams that they have. So bringing that together is something that will really have a strong benefit. And we'll see how that goes forward, but it will make us a relevant player when it comes to products and distribution channels.
I understand that the alternative asset portfolio at AXA was something that was particularly attractive to you.
If you look at it, so if you look at this, I'm oversynthesizing, but the strength that BNP Paribas is having is the distribution and the bank insurance kind of way of doing things. And then if you look at one of the key skills also that AXA has is indeed these different kind of products, of which this, so that's why it basically blending will make a very good fit.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.